Hey, what's up, guys? Welcome back to my channel. Welcome back to another video. And it's been a long time since the last time that I uploaded a video about the behind the scenes of my trades. And it's been a month since the last time that I took a trade. So hopefully, I find an opportunity this week. And the first pair that I'm gonna be trading this week is going to be CAD JPY. And the first thing that I always do uh, in order for me to determine if a trade is worth taking or not, I do my top-down analysis. I starting from the weekly, daily, and the 4 hour. Those are the three time frames that I use to identify the trend, which is, I do a top-down analysis on the weekly, the daily, and then the 4 hour to identify the trend. So in this case, I have the weekly bearish. At this point, the price was bullish, was creating higher highs, higher lows, higher high, lower low, shifted the structure. Then price created another higher high, breaking above this lower high, creating me another higher low, higher high, and then a lower low, lower high, and then a new lower low. In this case, the weekly time frame is bearish. And I also have what I like to see, which is a head and shoulders. I have left head and right shoulder. Why do I like the head and shoulders? The head and shoulders is a reversal pattern that it means that price is going to shift from bullish to bearish, meaning that price is changing the direction of the market. So going down to the daily time frame, the daily time frame is also bearish. This is the lower low, this is the lower high. The 4 hour is also bearish. This is the lower low, and this is the lower high. I wouldn't really count this as the lower high. I'll count this the lower high. So in this case, I have three consecutive time frames in sync. I only need a minimum of two, either the weekly and then the daily, or the daily and then the 4 hour. But in this case, I have three. Which is spectacular. So now at this point, it makes more sense to sell rather than to buy. So what I do then is I find what it's called an area of interest or support and resistance, whatever you guys want to call it, supply and demand area or whatever it is. And the way that I do it is, first and foremost, my area of interest has to be within the lower high and within the lower low. I only find an area of interest on the weekly and then the daily. Why? Because the market is going to respect an area of interest on the weekly and then the daily a lot more than it will do it on the 4 hour, 2 hour, etc. So, knowing now that I can only find an area of interest within the lower low and within the lower high, an area of interest is consisted of a minimum of three touches. It could be three touches above as support, or it could be three touches below as resistance. Doesn't matter. So here I have that whenever price is above, it's heading up. That's one touch. Here I have another touch that whenever price is above, it's heading up. And here I have another touch that whenever price is above, it's heading up. So this is a valid area of interest because it has a minimum of three touches. Another thing that we have to keep in mind when it comes to area of interest is that an area of interest cannot be bigger than 60 pips. In this case, it's 44, 43 pips. Because If an area of interest has a is measured more than 60 pips, I'm no longer interested in it because it is way too large. And it has to have a minimum of 5 pips. So I already have my weekly area of interest. I go down to the daily and I find my daily area of interest. But in this scenario happens something that I love to see, and that is when the weekly area of interest also overlaps the daily area of interest. As you guys can see, this is the weekly area of interest that I just marked up. Here I have it. When I go down to the daily time frame, that same area is consisted of 3 touches. Here I have whatever price is above is heading up, whatever price is above is heading up, and then here I have another touch that whenever price is above is heading up. And it also happens to be at the same weekly area. As you guys can see, I haven't moved anything and it is 43 pips, 44 pips. That's something that is beautiful because I have the weekly and then the daily area of interest together. That's something that is beautiful. It doesn't happen, it does not happen every day, but when it happens, it it has to be more respected because they are both correlated. So what I'm waiting for right now is I want for this daily candlestick to close within this area of interest, because if it closes above it, it can use it as support, because whenever price is above the area, it's heading up, and whenever price is below, which in this case I don't have touches as resistance, but let's say that this one is another touch, and whenever price is below, it's heading down. So if price closes in the next 5 hours, this is a daily candlestick. This is a daily candlestick. If it closes above it, I would not be interested in selling right away, because I would then need a break and then a retest below, because as I said, whenever price is above it, it can use it as support as it has done it in the past. So I want for this daily candlestick to close within this area, so it is below the area. And after that, I want price to then give me a candlestick rejection, something like this, some daily bullish or bearish pin bar. And then the next market that I'm gonna be trading is GBP CAD. GBP CAD. I've been looking at this market for almost a month, I think, and I haven't gotten my entry. So if I don't get, I could be looking at the charts. I could be looking at the market for a whole month or 2 months, let's say, for example. And if I don't get my entry, if I don't get all my confluences checked off, I will not take the trade. So this is one of the most difficult thing, let's say, to do when it comes to trading, which is doing nothing, which is just waiting for the market to give you the right opportunity. So in this case, sorry, the weekly time frame. Let's start off with my top-down analysis. As I said in the past, the weekly time frame is bullish. This is the higher high. I wouldn't really count this as the high low. I'll count this much more a high low, because here price does not give me any any signal that it has turned, but here, as we can see, price had that turn. So that turn creates what is called an elbow in the market. So I have the weekly time frame bullish. The daily time frame is also bullish, because this right here is the higher low. I wouldn't really count this as the higher low. This is the higher high, but I wouldn't really count this as the high low. I would much rather count this as the high low. So as long as price is inside of the higher high and then the higher low, we're still bullish. If price closes below this higher low structure point, now will then be bearish. If price closes above this higher high structure point, then price will have a new higher high. So this is basic market structure, guys. So what I'm gonna be waiting for is that, I mean, I also have forgot to say that I have my area of interest, which is this one right here, this box right here. That whenever price is below, it's heading down. So whenever, as I said, this support and resistance area works. I mean, whenever price is below, it's heading down. Whenever price is above, it's going up. So that's why it is called a support and a resistance. Whenever price is below, it uses it as a resistance. It's like a ceiling. And whenever price is above it, it uses it as support. So now price is above this area. So what I'm gonna be waiting for is for market to show me that it's actually rejecting this area. So I'm gonna be waiting for a doji right here, bullish pin bar, that shows me that the market is actually rejecting that area. I love it that it is rejecting the EMA. I have this round psychological level 1.88 thousand right here, this line right here, 1.88 thousand. So Euro AUD, this is it. All of this, I mean, except CAD JPY, but GBP CAD, Euro AUD, AUD JPY, GBP, and GBP JPY, those are markets that I was looking at a week ago. So they didn't give me my entry throughout that week. So I'm waiting to see if I get my entry this week. So let's start off with, let's continue with Euro AUD. On the weekly time frame, we are bullish, guys. This was the lower low, this was the lower high. Price body candlestick close. I mean, when it comes to market structure, I don't take into consideration the actual wicks. So the wicks are these tails that you guys can see in the market. That is where price was, but it's not where price actually closed. So for example, if you are going, if you are gonna go to the kitchen, let's say you are in your room and you wanna go to the kitchen, uh, as you walk, you're gonna leave footsteps. Maybe not, they will not be visible, but you are gonna leave footsteps. So the footsteps are not the exact place as where you ended up, which is the kitchen. So for me, the wicks are like the footsteps. It's where price had to walk or move, but it's not the place or the price where price closed. So I hope you guys understood that. If you guys didn't get me, just let me know in the comments and I will try to explain it a lot better. So yeah, so I have the weekly time frame bullish. This is the lower low. This is the higher low. This is the higher high. We already had the higher low, so I'm waiting for price to create another higher high, because on a bullish trend, the market creates higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. On a bearish market, the market creates lower low, lower high, lower low, lower high, lower low, and lower high. So in this case, the market is bullish, and I already have the higher high and then the higher low. So I'm waiting for price to create another higher high. So it is not that fast because we are on the weekly time frame. So it takes a lot more time to create. But on the daily time frame, we are also bullish. This is the higher high, this is the higher low, and the 4 hour is bearish. This was the higher high, this was the higher low right here. Price closed below this higher low, making this the lower low, which means that price has shifted the structure. It shifted from bullish to then bearish. So this is the lower low, this is the lower high, and this was the lower low, and this was the lower high. So let me mark this up. As long as price is within the lower low, the lower high, and within the lower low, we're still bearish. It does not matter whatever it does in between. So right here, price closed below this lower low. So then this became the new lower low. So the lower high is the previous structure point going backwards. So if you go backwards, the first turn that the market does, that is the lower high. So in this case, this right here was the lower high for me. So the, that this will become the lower high. So in this case, price is piercing this lower low structure point, but it has not closed just yet. This is another different topic. I don't want to confuse you guys, but this right here would have been would could be another lower low because it is piercing the current lower low. But since this candlestick hasn't closed yet, because it has 1 hour and 23 minutes left for it to close. Price could just be creating a wick as it has done it in the past. As you guys can see, at one point, price was below this, price was at this point, and then it ended up closing right above here. So until that candlestick doesn't close, it is not a confirmed lower low. So yeah, so at this point I have the weekly time frame bullish, the daily time frame bullish, and then the 4 hour bearish. So as I said, I need a minimum of two time frames in sync, two consecutive time frames in sync, in order for me to be interested in buying or selling. In this case, I have the weekly bullish and then the daily bullish. So that means that it makes more sense for me to buy rather than to sell. So after that, I go for my daily or weekly area of interest slash support and resistance. And I see that on the weekly time frame, I don't find any area of interest. So I don't have any visible area of interest because I don't see three dodges very clear. So I then go down to the daily time frame. Remember, guys, my area of interest is where is where I'm interested in taking a trade. It's an area where price has a higher probability of it reacting from it. But that doesn't mean that it has to obligatedly have a reaction from that area. The market can have a reaction from here. This right here is my area of interest. But price can go through, price can go past by it and it can close below it and then have the push up. Or it can have the reaction from here without getting to the area of interest. So I just have a higher probability that price is going to react from this area, because when I look left, I see that price, whenever it was below it, it went down. Whenever price was above this area, it went up. Uh, sorry, it went up. Whenever price was below it, it went down. Whenever price was below it, it went down. And whenever price was above it, it went up. So in this case, we are going to be above it. So I have high probability that it's going to go up. But remember, guys, nothing in trading is 100% fact. This is just probabilities. So as you can see right here, if I look left, whenever price broke above this area of interest right here, price broke above it, it then retested it and then went up. So that's exactly what I'm waiting for. Price broke above it. I'm waiting for the retest to then go up. So I trade based off of patterns, based off, I like to look left to see what the market has done so that I can anticipate what is gonna happen. What is gonna happen next. But remember, guys, nothing we can. I don't move the markets. I don't do any of that. So I just have a high probability. So I'm just waiting for price to get to the area of interest, rejected it, to then buy. I mean, AUD JPY. I was looking to sell this trade last night, and I mean, I was actually gonna wake up to trade London, but I didn't because I did not see the opportunity. I mean, trading London is trading when I trade, I only trade in two sessions, which is the New York session and then the London session. So London session starts at 1 in the morning, my time, and New York session starts at 8 in the morning, my time. So if I were to trade London, I'll have to wake up at 1 in the morning, which I've done it because when I started trading 3 years ago, I was waking up at 1, 2 in the morning for 2.5 years because I was in school when I started trading, and I had to wake up at that time because otherwise I would not be able to trade the New York session because I had to be in class. So this pair, which is AUD JPY, it is bearish. This is the lower low. This is the lower high. And on the daily time frame, we are also bearish. This is the lower low, and this is the lower high. So I was waiting for price to reject this area of interest. So in this case, I was going to sell, obviously. Here I have another area of interest that whenever we're below, we're heading down. Whenever price is above it, we're heading up. So right here I had already my entry signal, which was my daily rejection from this area because I see the price is slowing down, and I was waiting for a shift of structure on the lower time frames. So I didn't get my shift of structure, so I avoided this loss. So GBP, JPY, same thing. I was looking for, I mean, it's basically the same trade. Weekly time frame bearish, lower low, lower high. Daily time frame bearish, this is the lower low and this is the lower high. And price was, I mean, the market actually rejected this area of interest right here. Whenever price is above it, it's heading up. And I already have my daily rejection, my entry signal. But I was waiting for a shift of structure on the lower time frames. So as you can see, price was creating higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. We're testing to for that new higher high. So what I was waiting for was a shift of structure, creating me a new lower low meaning that price is going to shift from bullish to then bearish. So yeah, those are two losses avoided, guys. And USD JPY, same thing, avoided another loss. I was looking to sell this market. I mean, in this case, the weekly time frame is bullish. This is the higher high. I wouldn't really count this as the higher low, but this right here is the higher low. So I have the weekly bullish, the daily bearish. This is the lower low. This is the lower high. Then the 4 hour is also bearish. This is the lower low, and this is the lower high. So in this case, I have two consecutive time frames in sync, which is the daily and then the 4 hour. I need, as I said before, I need a minimum of two consecutive time frames in sync, either the weekly and then the daily, or the daily and the 4 hour. So in this case, I have the daily and then the 4 hour bearish, meaning that it makes more sense to sell rather than to buy. So yeah, that's what I said, guys. That whenever price is below, it's heading down, or whenever price is above it, it's gonna go up. So in this scenario, price broke above this area, it retested it, and instead of it using it as resistance, it used it as support. So for now, I'm just focused on CAD JPY, GBP CAD, and Euro AUD. So I'll update you guys later. So guys, market update. Let me show you what the market has done so far. As the JPY, I love how this daily candlestick close, rejecting this area of interest right here. All I'm waiting for is a head and shoulders. I'm waiting for the confirmation of this head and shoulders right here. Let me show you guys. Here I have the left, here I have the head, and I'm waiting for the right shoulder. Until that movement does not happen, the head and shoulders is not valid. A head and shoulders is only valid once it breaks the neckline of the head and shoulders. And in this case, this right here is the neckline of the head and shoulders, because we technically we're still bullish. This is the higher high and this is the higher low. I wouldn't really count this as the higher low because there is no clear focus. There is no clear shift. There is no clear elbow in the market. So GBP JPY. I love this rejection candlestick from this area of interest right here. That whenever we're below, we're heading down. Whenever we're above, we're heading up. We're also rejecting this EMA right here. I love that. I love this, guys. All I'm waiting for is a head and shoulders. And why do I like the head and shoulders? Why do I use the head and shoulders? The head and shoulders is a reversal pattern, because here we are bullish. So even though I have the higher time frames are bearish because I want to sell, I need to have the lower time frames in sync with the higher time frames, meaning that if the higher time frames are bearish, meaning that I'm going to sell, at the moment of me taking the trade, I have to also have the lower time frames, which are the 2 hour, 1 hour, 30 minute. I also use the 4 hour to to enter a position, even though I also use it as a even though I also use it for the trend. But what I'm saying is that the lower time frames have to be in a line with the higher time frame before me taking the trade. And the head and shoulders is a reversal pattern, and when it is formed at a resistance, it means that price is going to shift from bullish to then bearish. Because if not, if I don't wait for that head and shoulders shift the structure, it can do something like this. Remember, guys, at the beginning of the week, I was looking to sell at this area right here, but I was waiting for the shift of structure right here. This was the higher low, this was the higher high. I was waiting for price to break below this higher low, shifting the structure from bullish to then bearish. It didn't do it, so I avoided this loss. So that's exactly what I'm waiting for right here. AUD, JPY. I like this daily rejection, not as much as this one right here, because this shows me that the sellers are a bit stronger than the buyers, but it is still valid. It is very valid. All I'm waiting for is a shift of structure from here. Euro, AUD, nothing, and KGBY, nothing. For now, guys, let's just wait what the market is going to do. Which, by the way, I'll have to wake up at 1 in the morning to trade the London session. I'll try to make some clips, but I'll have to wake up. Hey, what's up, guys? Welcome back to my market update. And you guys know that I said that I was gonna wake up to trade London. But guess what? I didn't. I mean, the alarm didn't ring. I don't know why, but thank God I didn't wake up, because if I would have woken up at one, I mean, I actually set the alarm at 12:58 at night or midnight, because London Central starts at 1 in the morning my time. So I had to wake up in the morning to be active in front of the market. And I didn't want to wake up at 1 in the morning, because I would be like watching my phone like this. But if I wake up at least 2 minutes before the London session, at least I can see with both eyes. So my camera just died because of storage. Sorry, guys, shit happens, but nothing is going to stop this video. So let's continue with my market update. It's actually better that I didn't take the trade today, because now I have this double confirmation of this double doji rejecting the area of interest and rejecting the EMA. So what I'm going to be waiting for is this little head and shoulders on the 2 hour. This right here is the left, this right here is the head, and then this right here is the right shoulder. On the 4 hour, I also have these beautiful head and shoulders, which is this the left, the head, and then the right shoulder. A head and shoulders is not confirmed until it breaks the neckline. The neckline in this case is the structure point, because this was kind of like the last structure point. And a head and shoulders, as I said, is formed by a shifted structure. The price is creating higher highs, higher low, higher highs, and then it shifted the structure. So that is what a head and shoulders mean. A head and shoulders is a reversal pattern. In this case, it will show me that price is going to shift from bullish to then bearish. So yeah, we're still waiting on this. GBP CAD is another market that I'm interested in trading. And interesting enough, I mean, this is actually something that I'm going to test out. Well, actually, I know it's gonna be what it is, but this is actually a cross per correlation, and let me explain by this. In this market, I'm going to be selling the GBP, because if I sell, it means that I want the GBP to get weak, the British pound. And here I want the GBP to get strong, because if I buy, it's because I want the GBP to get strong. So one or the other is gonna give me the right moves. But I also have to take into consideration that it's not just one currency that moves the market. So I have to accept that, and I just don't know, guys. I'm gonna take both. If they both give me my entry, I'm going to take the trade. So USD JPY didn't like it as much. I don't like this pin bar. I mean, I do, but I don't. I would have loved if it would have been a bearish pin bar, but I'll be waiting for a head and shoulders here. And the reason why I will not look for a head and shoulders on the 2 hour or on the 4 hour is because the neckline is way too close to my take profit, because this is the left, this is the head, this would be the head, and then in order for the head and shoulders to be valid, meaning that it'll have to break the neckline will be the structure point. It'll technically be at my take profit, so I would have missed out on that position. So on the 30-minute time frame, price can create a head and shoulders very closely without even having to get close to my take profit. I don't know if you guys confused with that, but I hope you didn't. So AUDJPY, I'm no longer interested in it, because if that candlestick closes above this area of interest right here, price would then be using it as a support instead of as a resistance. As you can see, whenever price is above this area, we use it as support. When we are below it, we use it as resistance. If price closes above this area, it will use it as support instead of as resistance. So I would rather have a break and retest below this area. So in Euro AUD, this will be for next week, because today is already Wednesday, so tomorrow is Thursday. Hey, look at my shoulder, guys. Look at that, man. I'm not just flexing, but you know what I'm saying. So tomorrow is the last day that I have in order for me to take a trade, because I mean I show my shoulder. I was talking about my shoulder because I'm seeing in my camera that I have my shoulders pumped, but now I remember that the battery, I mean not the battery, the how it is, the storage got full, so I cannot record. But never mind, guys. So as I was saying, today's Wednesday, tomorrow will be Thursday. Thursday is the last day that I have for me to take a trade, because on Fridays, I don't take trades on Friday. On Fridays, the market closes. If the market closes, I will not have any session available for me to let my trade ride. So that would be pointless for me. Another scenario is if I enter, whether it's Monday, Tuesday, Wednesday, or Thursday, and I have to hold throughout the weekend. That's another thing. But me taking a trade, entering a position on a Friday, no, I haven't done it. I'm not saying that I won't do it, but it's just not part of my trading plan. And KJPY, I don't like it. So yeah, guys, let's see what London session brings tonight. Also, guys, good morning. Good morning. Market update. And I took the trade that I said that I was going to take, and this is GBP JPY. I woke up at 1 in the morning. I mean, I woke up like at 12:58. Two minutes earlier before the London session starts. And welcome back to the camera, guys. You guys know that yesterday my phone was, I mean, my storage was full, so I wasn't able to keep recording. But now it's back. I had to delete a couple of things, a couple of apps from my phone. But now we're back, and this is the trade that I took. As I said, I was waiting for the Head and Shoulders yesterday. Here I got the Head and Shoulders. But the funny thing is that I entered at the break of the neckline of the Head and Shoulders. I didn't wait for the retest. So the Head and Shoulders works in this way: left head, and you could enter at the right shoulder, but it's super risky. So what I always do is I always wait for the break of the neckline and for the break and then the radius of the neckline, which would be this movement right here. But in this case, I follow my instinct and I didn't enter at the. I didn't wait for the radius. I just entered at the break. Yes, it was a little bit more risky, but that doesn't mean that I'm breaking my training plan. I understood that it was a little bit risky, and I took it. And if I would have waited for this retest, I would have not entered this trade because I would have not gotten my entry signal. So, yeah, I'm in this trade, and I just have to hold it and not close. When I take a trade, guys, I commit to it. I accept the risk, and I don't close until I get stopped out stop loss or I might take profit. I don't close, I don't move to break even, and I don't do any of those stuff. The only way that I could close a break even is if it's, for example, Friday. Friday and the market is not, and I don't feel comfortable with holding a position throughout the weekend, that I could close. But I don't move to break even because I already accept the risk and I'm okay with losing this position. So you have to understand, guys, that losing is part of the game, that losing is inevitable, and there is no way to avoid losing, there is no way to avoid risk. What my strategy does is it gives me a higher probability. When I see a setup, what that means is that I have a higher probability of winning or one thing happening over another over a series of trades. For example, I know that with this exact approach that I take, over 20 trades that I take, I'm going to be up, for example, 50%. I'm going to be right 50% of those 20 trades that I took. But I don't know what the outcome is going to be. I don't know the outcome of the first trade, the second, the third trade. Those are random. So those are random, and I have to accept the risk. So yeah, guys. So I had a long time without taking a position, but this is just part of the game. So the other markets that I had on my watch list didn't give me any entry. So let's see what the market does. So guys, good morning. Let me show you what the market has done. No GBP is a trade that I took. I just got stopped out, and it is what it is, guys. I mean, it is what it is. But that doesn't mean that I am going to change my strategy. That doesn't mean that I am going to do something different. And this is just part of the game. This is just a probability game. You just have to accept the risk and take that loss and just wait for another opportunity to present itself. And I'm currently on a on a three trades losing streak. I've lost three trades in a row in the past 2 or 3 months, I think, 2 months. And yeah, the it is what it is, guys. And I hope you guys like this video. This is my week of trading, and see you guys in the next one.